Here is the recording for the session held on 11th of April 2020 at 1 p.m. Australian Eastern Standard Time.
So, uh, I was the guy who used to uh, do weird trades, and I had no information. And then somebody came across as a mentor, and he guided me on how to take an informed decision. And I have been doing that for last 3 years now. And this, for the past few months, I've been a full-time trader. Now, I'll start with the screen sharing session. Can you guys see my screen?
Yep.
All right.
Yes.
Anyone?
Yes.
Yeah. So the objective is uh, technical analysis. I personally feel is the easiest way to trade because there are different approaches to stock market, and I, being a novice and a newbie, I had to figure out the easiest way to trade. And just to give a short disclaimer, this is purely for educational purposes. I'm not a financial advisor. I can tell you how to trade, how to make an informed decision, but I can never tell you what should you trade or not. Uh, and for any specific advice, you should actually consult your financial advisor or tax consultant. Uh, so there are differences of opinion between technical and fundamental. And fundamental, uh, uh, tell me if anybody knows about fundamental analysis or not. Uh, fundamental analysis is mostly about all the details of a company, maybe their balance sheets, their profits and losses, their affairs of their executive members, government policies, tax policies, and whatnot. So it's not so easy to wrap your head around every one of those factors because you might think of 100 things and then one new thing might pop up, like Trump did for tariff. Uh, Unexpected things can happen, just like one fine day, a president of a country can wake up and say, well, tomorrow onwards, there is a new tax. Or somebody else might say, well, tomorrow onwards, 2,000 rupee notes are garbage. And that has a ripple effect on every single thing in market. And you cannot just figure out what to do. You cannot just figure out what all things you can study or not. So technical analysis is something pure maths, and anybody who can understand shapes, patterns, and simple maths, I believe, can do technical analysis pretty well. Let me go ahead with my presentation. Uh, so technical analysis is a method of evaluating securities by analyzing the statistical data uh, generated by market activity. As I said the other day on one of these group discussions, um, every transaction that happens in any market, it represents a tangible set of data which eventually gets transmitted towards the bigger picture of the company performance. And that translates into a graph. And if you put all of those companies together and look at the index, so index is something where all the companies are represented in one common denominator. For people who do not know what is an index, like BSE has 30 companies, S&P 500 looks into 505 companies' performance to uh, uh, gauge the health of market. What? Okay, so uh, indicators, sorry, indexes. So any transaction in any one company or any performance by any one company eventually translates into a point of increment or decrement in the index itself, which can be graphically denoted. If it is graphically denoted, it is actually there. You don't have to think about what might be the implication of a profit and loss and the fundamental stuff. Second thing is technical analysts do not attempt to measure securities' intrinsic value, but instead use charts and other tools to identify patterns that can suggest future activity. So it is like, well, whenever there is a exit sign when I'm driving on a highway, when I'm on my way home, I know this highway like back of my hand. And whenever I'm driving, whenever this sign comes up, I know that there is a grocery store within half a kilometer range. So uh, if I have some urgent grocery that I need to buy on a last minute, I can always take a detour. I don't need to change my GPS settings. I can just drive. So similarly, technical analysis is looking into charts and patterns. If you know a pattern and you know that something which is shaped like this can look something like this eventually, or the other part, like it can go this way or that way. It's all about looking into the shapes. Um, there are three basic assumptions of technical analysis. One, that market discounts everything. That means market takes into consideration every single aspect that we are thinking of. Two, price moves in a trend. There is always a trend. If it is uh, going up for the last, uh, let's say, 100 days, to let's say from in the last 100 days, price went up from 100 to 500. Tomorrow, it cannot go down to 300. It goes as a trend. It might go to 499, 498, but not 300. It moves in a trend. And then the third assumption is that history tends to repeat itself. It's more of a psychological representation of combined human psyche in a graphical format. The way we humans react when we are scared or when we are greedy. No matter what time period we are looking into, we can go as far back as 1872 when the actual that's the earliest possible data that I could find on stock markets for S&P 500 index. So that's a very interesting data to look at, and I'll show you charts in due course. So market discounts everything. So as I said, it's a basic assumption that company fundamentals, broader economic factors, market psychology are all priced into the actual transaction that is happening. So we don't have to think about it because the transaction that's happening is the real ultimate word, as I say. Price is the ultimate truth. That's what one of my mentors told me. Price is the ultimate truth. No matter what anybody says, if the price is going up, it is going up. It's going down, it's going down. No matter what anybody says. Now, hold on, somebody sent a message. Someone sent a message that the screen is not visible. Are you able to see the slideshow?
Yes,
Yeah.
everything good, yeah.
Fine for me as well, yeah.
Yeah, it's good for me.
Okay. All right. So
One question is, are you going to have a recording of what you're presenting?
yes, I am. Yes, I'm recording this.
Okay, so okay, that's available after. Okay, thank you.
Yeah. Second thing is Price moves in a trend. So in technical analysis, the price movements are believed to follow trends. That means that if a trend is established, uh, the trend, it's like Newton's law of motion. An object in a state of rest tries to stay in rest, and an object in the state of motion tries to stay in the motion. So similar to that, but if it is going up tomorrow, it cannot come down suddenly. It has to come down slowly in a pattern, and that is again visually very possible. You can look into that. So that's one more easy part of technical analysis. And then history tends to repeat itself. Uh, so, as I said, it's more of like market psychology, human psychology. We as human race have behaved the same way, whether it be the flu of 1918, whether it be the coronavirus of 2020, whether it be the two world wars that were fought, or the last war in Middle East or wherever. The human psychology behaves the same way, and hence the market also behaves the same way. We did not have any problem uh, compared to other countries in Australia, but still there were people hoarding stuff, even though everybody was saying do not hoard. So, psychology is a human factor, and we are all wired in the same way, and it repeats again and again, no matter what. There is a flood, people have the same psychology. So, there is a disease, people have the same psychology. So, this is what. There are some common misconceptions about technical analysis. We don't try to predict the future. We are not predicting the future. Uh, it's more of spotting the trend. If you spot a trend, and you know that the next thing that happens after this is either case one or case two, it's easier for you to make an informed decision of getting in or out of the market, because you saw what might be coming in or not. Second thing is, uh, people think it is very necessary to identify the beginning or end of the trend. The answer is no. Uh, the people who try to enter uh, just at the right moment, finding the top or finding the bottom, they are not the most successful people in trading. I personally believe that if you lose first 5 or 10% when the market is going up or coming down, and then make a decision, you see that the trend has been established, and then you might decide to get in or out. That is the best way of trading, because you have established a trend based on historical patterns. It's not because my friend said that market is going up, so I'm going to buy. My friend said that the market is going down, so I'm going to sell. So with the trend analysis, you can do it with better probability of making more profits. So that being said, I'll move on. Trends and charts. There is a beauty in this thing that the trends are very versatile. It can be used for commodities. It can be used for indexes. It can be used for bullion, precious metals, even livestock. Uh, uh, Charts, they all work in the same way. In fact, latest, the coronavirus chart is actually following a trend analysis. The principles of technical analysis are universally applicable. Uh, the next good thing is you don't need a degree in economics or finance to understand the technical analysis. If you can figure out shapes in clouds, if you can say that this cloud looks like a dog and that cloud looks like a cat, well, you can do technical analysis. That's the easiest part. And
So,
yeah,
uh, uh, s- yeah, Danish, I just wanted to ask that what you're saying is that it is easy to get the idea using technicals rather than the fundamentals, right?
yes, you cannot wrap your head around everything. Fundamental is a panoramic view of the whole world, and there is always something lurking out in the dark, which is unexpected thing. One fine day, a king of whatever country wakes up and says, tomorrow I want uh, no Pepsi in my country, and then suddenly Pepsi stock gets affected because one major company pulled out of one major country pulled throw them out of the market. So things like that happen. Um, and then the principles of technical principles of support, resistance, trend, trading range, they can be applied to anything and everything. In fact, my mother was planning to buy some gold a few months back, and I told her, do not buy gold. It's not going down anytime soon. Wait, when it goes down, I'll tell you when to buy. Simple as that. She just wanted to buy some jewelry. And I said, hold on, this is not the right time. So,
Great.
Hey Dennis, I have a
yeah,
very basic question. I don't know if it's very early
sure,
to ask, but
ask.
when you say the charts are going to suggest the future, or like, I mean, it's not future, but the chart would give a trend how the price of the stock goes
Yeah,
up or
yeah,
down.
yeah.
My feeling is like stocks should go up or down basing on the performance, right? I mean, my understanding is that how can a chart derive the next step of this cost of the stock when the stock should perform well? That is the basic fundamental. Then that people take chart
No,
analysis. So
no,
how
as
does that correlate? I mean, just my question is straightforward. Is like there should be people buying it to grow the stock to go up, but the chart does not say that. If that chart, according to this, it is at this level and it should definitely be a buy range. I was a little confused in that position. Like, how does charts predict and people take decisions according to that? I mean, it may be a question, but that is always lingers in my mind.
so one thing that I have learned is be with the smart money, not with the not with the uh, not so smart money, I should say. Because and what is smart money? First question is what is smart money? Smart money is all those hedge fund managers and investment bankers and all those big shots who are the world makers, all the JP Morgans of the world, all the Lehman Brothers of the world who make and break the world. Hello?
Yeah,
So they don't make a decision based on where is the sentiment of the market. They do a very calculated approach. Whoever is not mute, please mute if they're not speaking. There is a lot of noise. Okay. So so people who are the market makers, they have a very um, systematic approach towards market, and um, I call them elephants. You move from one elephant to another when one, and you can see in the chart when the elephants are moving. When I say elephants are moving, you can see the pattern when something big is about to happen, and that's a chart pattern. The more you look at charts, the easier it gets for you to take an informed decision. Uh, you don't have to be in one trade all the time. Um, like most people have a misconception, buy and hold, and eventually you're gonna be fine. Yes, I agree, but I can mathematically. I'll show you in a bit how that approach does not, uh, is not the best approach. I would say that approach is always not the best approach. Um, things advantages. So one, it has minor reliance on fundamental data. I don't care about economic indicators or job numbers or inflation numbers or retail sales. I don't care about any of those things when I make a decision. That's all fundamentals. Like, uh, you know, simple thing as toilet paper is in shortage in most of the developed countries of the world because of this recent hoarding of toilet papers. Would you think that the companies making toilet papers are going up or going down? And would you want to invest into that based on this market frenzy? I don't want to do that. I don't want to look into all those fundamental details. I don't have that much time. I have life. I have family. Uh, Simple as that. I cannot take that much time out. Another considerable advantage of technical analysis is that it provides you with a quick snapshot of data, as it includes all the information you need in just one chart. Price movement, volume, open interest. If you know what you're looking for, you can actually make an informed decision right then and there. You don't have to say that, well, this was the last quarter's report, and this is new the government is about to start a new uh, interest rate change or something like that. Nothing of that sort happens in technical analysis. It has already discounted all of those things. Uh, Now, disadvantages. It does have disadvantages as well. Uh, you should be very careful when you're basing your strategy, because there are some indicators that are lagging. When I say lagging, you see an indicator once the thing has already happened. Maybe you take a wrong step and you're already on the wrong side of the trade. We don't want that to happen. Nobody wants to be on the wrong side of the market. Another weakness is that, well, everybody knows how to do technical trading. Not everybody is as fluent in fundamentals, so technical trading is easy way out. When it is easy way out, there is a lot of competition, and you are competing with a lot of people using the similar tools that you are using. That's another weakness. They might be experts, they might be newbies, but they have the same tool. And last but not the least, uh, you will need to learn the interpretations of those tools. Some things might be in short range, something might be in long range, and you have to figure out a way to strike the balance of of how a short-term indicator is behaving um, in comparison to a long-term indicator, and it becomes uh, uh, kind of sometimes it becomes like a tunnel vision for people. People tend to look what they are trying to look for. It's not the other way around. People end up finding we're doing like wishful thinking, and that is not the best way. So that's one more weakness. I'll show you some live examples. I'll show you guys some live examples. In the meantime, if you have any questions, feel free to ask
Yeah,
while I'm putting up
Danish,
the chart.
quick question.
Yeah.
Yeah, quick question on this thing. So, is technical analysis primarily done with folks that are more focused on trading or investments?
Uh, either way, either way is good. If you guys want to pick up a specific ticker, uh, feel free, or I can just pull up S&P 500 chart.
Can we look at some Australian ticker, please?
ASX, you want to do ASX?
Can you look for Microsoft?
Sure, Microsoft.
I think it'll be worthwhile picking up something which is relevant for everyone. So maybe something which is Australian might work.
So I'm not going to show you something very specific to the market, but I'm going to show you something very relevant to anything and everything. Okay, and believe me when I say that. So this is Microsoft. You can go pick up anything. You can do Nifty or ASX or S&P 500. The chart is a chart. I'll show it to you in a bit. Just give me a minute.
Let's do ASX so everyone can understand because everyone is from
No, there
Australia
are
itself.
people.
So
There are people from India as well here.
okay.
The
Yeah.
people from India, US, and Australia. I'll show ASX as well. Don't worry about that.
All right. Thanks. Yeah,
Okay.
thanks.
So hold on. I'm not very familiar with this tool. I'm still getting my ways around it. So I'll show you in another tool that I use. That's IB. More
What's a
familiar.
good tool that we can use? In fact, that would be helpful.
TradingView.com. I mean, it does have this feature that I'm about to show, but I don't know how to use it.
Are there any kind of specific indicators that you use?
Trend indicators and moving averages is something which I always swear by.
Are you trying to put Fibonacci or something?
No, I'm trying to calculate the percentage move up or down,
Okay,
like
I'm
how
not sure
much
about
percentage it moved up from this point to this point. And I wanted to
that.
show
Okay.
you that calculation. Like if you put $100 in there, what will be the percentage growth? And you can easily calculate that part. Very nice.
So, can you teach us how to, analyze the market, like where the market is going to go? Like, say, for example, in this particular graph, how can we make a decision if Microsoft is going to go down or going to go up? Can you teach us that?
Okay, so let's say. So
Hi,
let's say,
Danish. Sorry, this is Arun.
yeah,
In trust of the group's time and everything, can I request you to use whatever tools you are familiar with and do not bother about anything
yeah,
else?
I'm
And
trying to
whatever you
log
want to
in.
show, please.
I'm
And
trying to
others
log in.
can others can definitely drop you an email or on chat saying that these were their concerns or questions. Thanks.
Hold on. I don't mind showing my tools, just that it's taking time to load.
No, I definitely understand that. It was just coming from the point that this is a demo and it would be good if people learn
Yeah.
much of whatever you have.
Yeah, hold on. I got it.
Even I have questions here. Okay, yeah, sure.
So this is, let's take Microsoft. Let's pick any point here. And so if you were to invest in Microsoft back in, what is the date? 2017, just 3 years ago, you would have been 123% up. Okay. Here, the price was 78, 79, and here the price is 190. But then suddenly the market dropped 80%, 79, 80%. And you lost all this money that you made. You lost all this money. So a person who stays invested lost so much money already that he could have saved potentially. I personally would have, what I would have done is I would have traded up. Oh, sorry. I would show. I would have traded from this point to this point and then got out of the market. And this is how much percent?
When you
90.
say you're gonna exit at the time, what
Yeah.
could be the reason? Like,
This is
how would you
40%
derive that?
up. So this is 40% up. And then this is 20% down. So I'm already saving my 20% that I made. And then I made another 40% up. And then sit on next 9% down. And I make another what? Ooh, 60. So 40 plus 40 plus 60 is already 140% up. And then I avoid this thing. And then I go in again here. And I'm again 25% up. So 140 plus 25 is 165% up. Whereas a person
But
who was
yeah.
what?
So whoever stayed invested, they must have got some dividends as well.
Let's not talk about those dividends. Let's talk like simple back of the envelope calculation. So
Yeah, Danish, sorry to bother you, and don't take me wrong. So you always plot the graph at the highest point, that is where you exit, and you buy again at the lowest point. So on the hindsight, you would not be knowing where is the highest and the lowest. So definitely there is
I
a
truly
trend.
agree. I truly agree with that. And
Yeah,
all I'm saying is a person who invested here and is still sitting on the stock right here.
yeah,
Okay,
yeah, definitely. Yeah,
he is 100% in profit. This guy is
correct.
100% in profit. Whereas if I were to say, I got in here, and I get out here. Okay, let's say I get out here,
Mm,
right in the middle.
correct, correct,
This is 30% profit.
So I
correct.
think
My
Danish,
question is, how
the
do
group
you
have a
decide that?
question, including me, saying, how do you identify that 5% of market trend going upwards or downwards, and then you do a stop loss or buy a share?
So that is where the trend analysis, the shapes and clouds come into place. That is where I say, try to find the
So
shapes and
if you can just share an example of one of that,
yeah, I'll show you.
whatever you did trade. Yeah.
I'll show you.
So maybe take example of this, and what do you derive from this from next week? So
Okay,
you give a suggestion.
let's look at this. Okay, this is S&P 500. This is the oldest index in the whole world. Sorry. I'm going to show you the weekly charts. Look at this fall. Look at this pattern. Just this pattern. Okay. I hope you all can see this pattern, how the market went up and then boom, it came down. This is in 2018, December 2018, right? And then now look at this pattern. It went up and just came down crashing. If you can see the similarity in patterns coming down, you can see similarity in patterns going up. Are we on the same page?
No.
No?
No.
Okay. Okay, I'll show you something. I'll show you the crash of 1987. See how the market, whenever market is trying to go up, there is always a stop and this is called as resistance. Like this is a resistance. Here it is a resistance. Market is preventing to go, the forces are preventing the market to go up. And every support and resistance is a very important level, because once there is a resistance here, it becomes a support later on. Hold on. So this, you see, is a resistance. Market is trying to go up. It slammed down, again go up, slam down, again go up, slam down. Now it broke with huge force. Now while going up, it went up. There are many resistances and supports here. But when it came down here, crashing, this resistance became a support and tried to keep the market up. If you look at this point, this would also be a resistance somewhere in the past. Look at this. It bounced off of this point. See, here, this was an all-time high. Do you see this? This was a previous resistance, which became a support at the rock bottom of 1987 crash. Look at this support. This resistance is still support. Market is bouncing off of this line. This line is not letting it go down. And then it just flies up. Now, every time there is a support and resistance level, market will try to respect that level. See this one. I specifically drew this level here. I'll draw one more line here. This will help you decide how to make a decision. Like I used to be fascinated when people used to say, well, if it falls below this point, it will go and hit this point. And I was like, how do you know that? And this is how. This is a resistance. This is a resistance. Market could not break it. Now go to future and see. Somewhere, how it will be support. Here it is a support. This one is a support. This becomes a support. Whenever next time it will fall down, it has a support and resistance level. And another important tool, I'm pretty sure people who are from IT background, they would know, is Fibonacci levels. Let's say I'll show you Fibonacci levels from 2009. Look at how every time these Fibonacci levels are acting as support or resistance. See, this is a resistance right here. This is a resistance right here. You can always draw Fibonacci levels and figure out what's happening or not. In
How
case
do you
of
Fibonacci levels, like you picked up from 2008 to now?
Yeah.
I understand, like it's from lowest point to the highest point gives you that Fibonacci 61.8, which is kind of one very crucial one. How do you pick up the time periods? That's where I always get confused. I can draw.
Depends on what you are looking for.
Sorry, guys, can everyone put the mic on mute if you're not speaking? Thanks.
So Fibonacci depends on your time frame that you're looking for. If I'm looking for what's the next big disaster coming in, maybe I'm looking for the longest ever Fibonacci levels. That's like 10 years long. If I'm looking for next few days, I'll show you next few days. Let's see next few days. I'll draw Fibonacci from the nearest drop down.
When you're drawing it, you're drawing from top to bottom. Shouldn't it be bottom to top?
This is the near. It can be both ways. It can be both ways.
Okay. Because the percentages go reverse here.
Yeah. Yeah. So look at this right now. Can you see how this line is? This Fibonacci line is level is giving a strong resistance to this candle. This little guy, especially, and also while falling down. Look at this. While falling down, this fell down. The Fibonacci tried to push it up, and then again it fell down. Again, this one right here. It fell down, touched Fibonacci. The next one opened up here. It would try to go down as low as this one. It opened here. It tried to go down, but Fibonacci pushed it up to this level. So Fibonacci.
So that's the right level, yeah.
What?
Because since we have drawn it from top to bottom, so otherwise that 23.6 could have been 61.8 level.
Yes.
If you draw.
So this is losing 60. This is 61. This is losing 61.8%. Not 61. Yeah. So sorry, 76, 78.6.
Yeah, so it's been negated.
Yeah, this is losing 78.6%. Now on going back up, we are already at a 50% drop. 50% gain or drop, whatever you may call it. So the bottom line is, it's all about shapes and patterns. You can actually do Fibonacci right here from the second leg down. And from the second leg down in the market, you can automatically see how things just line up. These three candles are trapped between these Fibonacci levels. This candle just stopped right at the Fibonacci level. It tried going up, there is a wick, but it stopped. Again, these two candles were trapped. This one just broke. So this Fibonacci is just one of the things. I'll show you on. Look at.
Can you show us one stock which might happen in the future instead of like what has happened in the past?
What do you mean happen in future?
I mean, what we were seeing until now was historical, right? So can you do some, pick up anything, whatever you want, and
okay.
Can we make a prediction of what is going to happen?
Again,
sorry, Danish, a good suggestion would be to just use ASX, so we could cover that as well, just to see what the trend is and what the market, I mean, given the situation is Saturday today, we obviously cannot predict what's going to happen.
Yeah.
But what does the trend look like? Let's just have an example of ASX.
Yeah.
And what, in your opinion, is going to happen when the market opens on Tuesday?
I'll just show you.
Perfect. Thank you.
XJO is ASX. Okay. And okay. So, as you were saying, predicting the future, I cannot predict the future. But here is the thing. This is ASX. Look at this channel that was formed and see how the median line, look at the dotted median line. Can you see that?
Yes.
Okay. So the dotted median line here is acting as a perfect resistance until this point. And from here, I drew the Fibonacci down, and then it tried to stay above it, but the outer edge of the channel was trying to keep it under it. And then suddenly Fibonacci's line up here. And at this point of time here, right in the center, market says, you know what, I'm not falling down anymore, and starts moving up. The day it broke the downward channel is the day I made this upward channel. I have posted few images in past on the WhatsApp group. This channel I have not edited. The cup and handle shape that I was mentioning over the group, I have not changed that part as well. And see how the candles are just lining up. This is a classical shape. This is a classical shape, cup and handle. It's respecting the lower edge. And to give you an idea, this orange line is a 20-day moving average. This blue line is a 8-day moving average. The day 20-day moving average goes below 8-day moving average, suddenly it becomes the support level, the 8-day moving average. Here, this was the resistance level. It started pushing up here, and now we are in a better off situation relative to here. Because here, 20-day was acting as the resistance to 8-day support. This was the sandwich area. 8 days support, 20 days resistance. Right now, 8 days support, 20 days support. The direction in general is the trend is moving upwards. The 8-day trend is moving upwards. It's trying to stay within the channel. It is trying to break this Fibonacci level. So for Monday, if we're able to say, there are forces acting up, technically, yes, but there is a major force acting down, that is Fibonacci. ASX specifically is at 50% Fibonacci level. Does that answer your question?
It does, but one question on that. Let's say, because this is like public holiday, Monday, the markets will be closed. When would be a best time to see the trend, to see what actually is going to happen on Tuesday? Now we don't necessarily know. Sorry, go on.
Yeah. It doesn't really matter because markets open and they give you the latest, last 1 hour, last 20 minutes, last couple of hours. But the historical push here, it still remains, So let's say we were looking at market when we were at this stage. Let's say we are here.
Yeah.
We are on this day. And this green candle that you can see, it has still not formed. Okay. Let's assume we are on this particular day here, 12th of March. And you ask me this question, what's gonna be tomorrow? And I say, well, tomorrow, if we break 50% Fibonacci line, and it's not even Fibonacci. So sorry, let's not even think about Fibonacci. I'll remove Fibonacci. And I say, well, tomorrow it's gonna be a downtrend. And you say, why? And I say, because there is a channel. There is a channel. It has to go sideways like this. It was trying to break the channel. And it would have gone like 3 or 4 days sideways or upwards to break the channel. So here, when you move to the right of the graph, it did not break the channel. It did not break the channel. It still did not break the channel. It still did not break the channel. And on this day, if you were to ask me, well, where is it going to go now, tomorrow? I would say, well, it's trying to break the channel. I see very strong signals, but if it does, it won't go too far away. One thing is for sure, it will either stay within this range or just above it. And what happened here? Just above it. Because with the channel, it would have stayed just like this one. Look at this. Look at this. It tried to break up, but it stayed within. Because at this point, the channel was narrow. Then it got broader. But it did not break the channel.
Yeah.
So I hope.
So just for the uneducated, Danish, what's the channel?
Channel.
Channel is the
channel is just. What? Sorry, cut you out. Can you please repeat that?
No. Is it the simple moving average line that you're looking at?
No,
that's the channel, is it?
It's just like joining the highs and the lows of these days together.
So it's telling you that the ASX will open up by next week. Is that right? Or
Yeah, possibly it will try to break the Fibonacci level. As I am saying, I cannot predict the future.
Yep. Okay.
I cannot.
One question for the Fibonacci levels. How did you created the Fibonacci in the trading view, and how you easily removed it?
Oh.
I'm not sure I followed it. So can you
Okay.
give a
I'll show
quick
you.
overview?
I'll show you. Fibonacci, and then I picked up a point here. I dropped it here. I select it and I hit delete button, or I just hit this one. It just goes away.
What about the median line, Danish?
Median line is nothing but just so. I'll show you what it means. So let's say we were here, okay? We were on this day. Let's say we were on this day, okay? So the channel would not have been this broad. On this particular day, I would have drawn channel like this. You see what I'm saying? It just calculates the median value on its own. This is an automatic tool. And if I were to draw this channel like this way, and I kept it this way, suddenly this median level becomes a support level, say. So the channel is nothing but just trying to cover all the highs and lows of a particular time period. Nothing is fixed. You can keep on moving, but it respects the pure maths. This is just slope. So if you were to buy, if you were to buy ASX shares or ASX ETF here, and you get out here, at this point. So this is, let's say, 5490, and this is 6850. So you're already making quite a good profit up to this point. And then you realize, oh, the trend has already reversed. It's going down. Get out of the ship. And now it's trying to break 50% Fibonacci. Once it clears 60% or 61.8%, to be specific, it's a stronger resistance / support level. You can try to jump back in, and you save yourself the 30% drop that happened. You getting my point?
Question around
I cannot hear you. There is a lot of static noise.
causing this. What I'm saying is this moving average.
I'm sorry, I cannot understand a single word of whatever you're saying. No.
Danish, I just want to know are Fibonacci and moving averages one of the leading indicators that we have?
Not quite. Not quite. Fibonacci's are just the pattern of nature. When you cannot find anything else, try to find the answer in Fibonacci. This is what I go by. And then leading indicator is a MACD, probably sometimes. MACD is a very good indicator. So let's say here, at this point of time, MACD just crossed up at this point. And the next day candle, look at this one. MACD is above the orange line. The blue line is MACD line, orange line is wait, hold on. Let me see the which one is signal, which one is orange. So orange is signal, MACD is blue. Yeah. So MACD crossed above signal line on this candle, but this candle is right next to the bottom, and you cannot even know whether it is going up or not. But MACD has already crossed up. When the MACD has crossed up, what happens? Market moves up. It moves up. It's not going down. The blue line is still above orange line. It is still above orange line. What does it say? It's going up. You can check it out in what do you call? Want to see Nifty? What happened here in the bottom? MACD crossed up, and it is still up, still going up. It's not going anywhere, and so is market. Let me show you with SPX. This is the rock bottom that happened a few days ago, 23rd of March, and MACD just crossed up.
Sorry, I just realized. Hi, Danish.
Yep.
Is it audible?
Yeah, you are audible.
Okay. This is Arun. I'll just put a question, and it's up to you whenever you want to cover or how you want to cover. Which is, we are looking at the graphs and everything, which is awesome. We have patterns, you are saying, and you have different patterns, and then the good point is we can make a decision of yes or no, like buy or sell, something like that, based on the patterns and all those signals.
Yeah.
This is what we are looking at the past, which is fine, and we make the call of future. Now, you told when you started the session saying that you should not start investing at the entry point or exit at the downfall when the downfall starts, but you should wait for looking at the trend for 5% or 10%, and even if you miss that 5-10%, it's fine.
Doesn't
Make
hurt.
a profit. Yeah, to make a loss or not have a profit of that 5-10%. Now, if everyone would have a question who is like me saying, how do you analyze that 5-10% has started and you try to invest? Take your example, any of the example, and then till what time you go with this?
I'll tell you with the live example, okay? And I'm not taking historical data now.
Okay, great.
You want to pick any particular stock, or I can just, this is, you can consider this as anything.
Take whichever you like. Take whichever you like.
I don't just stop looking at the name here that this says SPX 500. It can be anything, this can be MRF, it can be Coles, Woolsworth, or whatever, This chart can look like any other chart. A chart is a chart, a candle is a candle. So
sorry, can you because we are new, can you just say, okay, what is in your mind? Do you want to take 1 month chart to start your analysis, 3 months chart, 3 years chart, whatever, and spend 30 minutes on that, or whatever time we can have another session? But that's the thing. Yeah.
I'll try to wrap up as as less time as possible.
Done.
Let's say Google. Okay. Everybody knows Google. All right. So this is Google, and this is a fresh chart. Google just cleared 50% of its Fibonacci level from the last leg down, and I would still wait because if you see down below, MACD is trying to turn back down as of right now. If it crosses this orange line, and let's say I buy it at $1,209, which is the current price, and MACD crosses the signal line down, what will happen? This next candle goes down, and even if it goes to 1166, that is the next Fibonacci level, I lose quite a reasonable amount of money. So I would.
Danish, one question here.
Yeah.
So you've taken 8-day and 20-day moving averages. I've seen some examples where they've taken 30-day or 15-day or even 40-day, 15-day averages.
Yeah.
How would those make a difference?
It's all again your personal preference. Like if I were to give you an example, this is how people trade on long term versus short term. The longer period I'm looking for, the longer target I'm looking for in timeline, and I'm trying to be more safe. The shorter period I'm looking for, I might have to jump the ship in a shorter amount of time.
Okay, that is a valid point, Danish. Tell me one thing. Let's go with any example. Let's think we want to trade intraday, which is the riskiest.
Okay.
But yeah, so let's look at that point, and what would your analysis would be? What's your preference?
So this is a 4-hour chart.
Okay.
This is a 4-hour chart, and this is still following Fibonacci. See, it's dancing around 50% Fibonacci. It's